Hey, it's Jeff Garber, mortgage expert and mortgage interest rate guru, coming at you with a weekly mortgage interest rate update. This is for the week of Monday, May 9th, 2022. A lot going on since our last update. Let me get myself out of the way here and I will begin. So it's great to have you here. If this is the first time you're watching one of these videos, let me explain what you're looking at here. I know it can be confusing, but it's really simple. Mortgage rates come from one place. They come from the bond market, specifically mortgages that trade in the bond market every day. They are called mortgage-backed securities or mortgage bonds for short. And the bond market kind of works a little bit opposite of the stock market. As price comes down, as you can see this downward trend on this chart, all right, as price comes down, rate is actually going up. And the other thing you need to know is green is a good day, red is a bad day. Now this is a chart pattern these are called Japanese candlesticks. And this is kind of the first time I'm mentioning this, but you can use Japanese candlesticks to measure anything, not just the bond market, not just mortgage bonds, but many people that analyze stocks will also look at the stock and use Japanese candlesticks to chart the progress of the stock. And if you're into crypto, you can even use Japanese candlesticks to chart crypto's movement. All right. And each one of these candlesticks actually tells a story, and there's a whole philosophy behind it. And if it's something that you're interested in, just Google Japanese candlesticks and you'll find plenty of information. But for our sake, keeping things really, really simple, we like to look at the candlesticks because as they're going down, we know rates going up, and as they're going up, we know rates coming down. And that's really all we need to know. So rates have been going up, as everybody knows by now. It's no secret that since the beginning of the year, we've had pretty significant rate hike from the around 3% into the 5s. And so far, we had a little bit of a head fake. Last week, we had the Fed rate hike, and the Fed did raise short-term rates. Fed meets every 6 weeks, and the Fed's job is to really control inflation. For the most part, they have a lot of other jobs, but their number one job is to stay ahead of inflation, and they've done a terrible job at that, right? Everybody knows that now. Look at the cost of everything that we're paying for. So the Fed is going to aggressively hike short-term overnight rates. Again, they are not long-term rates. Short-term rates are things like credit card rates, auto loans, home equity loans, things of that nature, not mortgage rates, not long-term 30-year fixed rates. Now, the reason the Fed hikes interest rates is because they want to slow the economy down. As odd as that seems, what they're doing is raising rates to make things more expensive so they can slow spending down, and typically inflation will stabilize and possibly even come down if the Fed hikes rates enough to get ahead of inflation. So we're going to continue to see rate hikes. We're anticipating another 0.5 point rate hike in June and another one in July. And these are big rate hikes. 50 plus 50 plus 50, a half plus a half plus a half is 1.5%. So if short-term rate is 3%, I'm just using that as an example. By the end, in 3 months, that 3 can go to 4.5%. So that's a pretty big rise in overnight rates. Now, inflation, as I say every single week, is the kryptonite to the bond market. That's the reason why rates go up. If there's inflation present, rates are going to follow right along with it, and that's exactly what we have been seeing. So we know that if the Fed can get ahead of inflation, then mortgage rates can come back down. Now, are we it's not the end of the world here. Now, mortgage rates have rose, and they are in the 5s. And as a disclaimer, I am not giving any rate quote at all here. I'm using this for informational purposes only. So rates have crept up into the 5s, and that's really not the end of the world. I remember when we were in the 7s and we came down to the 5s and everybody refied and life was great. Unfortunately, when you're in the 3s and you come up to the 5s, it's end of the world type news, but it's not. All right, people can afford a house still in the 5s. Of course, it's not as nice as we would like it to be in the 3s, but that doesn't mean that you can't get a mortgage. And the media does a phenomenal job at creating fear and keeping people on the sidelines, and that's exactly what they're doing. My point is, look, a pre-approval is free. If you're talking to the right person, who's giving you the right information and the right education, you have absolutely nothing to lose by getting a pre-approval. You don't have to pay for it. So don't listen to the media. Get out there, talk to a lender, talk to me, get pre-approved. Okay? You have nothing to lose. You'll find out exactly where you are. And also remember this. Everybody compares the rate that they get for 30 years. A lot of people are brainwashed. Like, oh my God, I am going to be at this rate for 30 years and I'm going to pay all of this interest over the 30 years that I have this loan. Well, guess what? That's only true if and only if you keep this loan for 30 years. And the last time I looked, very few people, actually keep their mortgage for 30 years. If rates come down, people are going to refinance, which then erases your logic completely from the day you were thinking about getting a mortgage. And rates will come down again. It's very cyclical. They don't go in the same direction forever. And when they come down, that creates opportunity for a refinance. And refinances can make a lot of sense. So my message is, look, even though rates are in the fives, get pre-approved. Talk to somebody. Don't listen to the media. You may be able to afford more than you think, may be temporary. And look, affordability is an issue for some people. No doubt. Rates did go up. Home prices are up, as everybody knows. But guess what they don't tell you in the news? They don't tell you that wages are up too. Right? People make more money each year. So with the increase in wages, even though rates are up and housing is up, it doesn't mean that you can't afford it. You just got to take that step and see. And you have nothing to lose by doing that. It'll be a great drill. You may find, hey, this isn't as bad as I thought. Let me jump in and see if I can get a house now. Or maybe you say, hey, you know what? It is a little bit higher. At least I know. You're not banking your information or your decision off of the news, whose job is to feed off of negativity and keep you on the sidelines. And that is the biggest problem we're seeing right now, is fear. But again, you have nothing to lose. It doesn't cost you any money to get a pre-approval. So jump out and get one, and you'll know where you're at, and you'll know, hey, maybe it isn't as bad. So last week, the Fed hike, it helped rates on Wednesday. Thursday, unfortunately, we gave it all back. That can happen. Fed news, there's a reaction to the news. It's typically a knee-jerk reaction. We were kind of hoping that momentum from last Wednesday would follow into Thursday. It didn't, unfortunately. So we ended up back where we started from. And Friday, we were a little bit worse. But Monday came along, and we had a nice day. We had the jobs report on Friday, and the bond market reacted pretty well to that. And you know what's even funnier? At the time I'm recording this, the bond market just opened. It literally just opened. And I can already see that we're already up 38 points, which is a great sign. And now we're actually starting a new little trend. Let's see if it's another head fake or not. But look, we had a good day Monday. This was Tuesday. So Monday, Tuesday, Wednesday, which was the 11th, we did finish higher than we closed the day before, even though it's a red candlestick. We still had a little bit better of a day. And today, which you won't be able to see yet, we're actually off to a good start. So maybe the bond market is liking the initial Fed hike and the jobs report that we got from Friday, and maybe we'll start to see interest rates come down. That's what we want. But again, my message today, don't listen to the media. If you're even remotely thinking about selling a house and buying a house, or if you're a first-time buyer, go get a pre-approval. See where you're at. See what the real numbers look like, because that's the only way you're going to know. All right, I will catch up with you next week, hopefully with some good news. Have a good one.